Good morning, everyone. Welcome to Windsor Brokers live daily outlook for majors for Monday, 24th of October, 2011. The long-awaited Eurozone summit that was yesterday gave put some more light actually in the current efforts of Eurozone officials to handle and solve, actually give some more direction in solving the current Eurozone debt problem, as the time was running out and the quick decision was requested in order to prevent spreading the crisis to the other big economies of the Eurozone, such as Italy, which is number one, and then Spain. The European Union leaders made some progress yesterday towards a strategy to fight the Eurozone debt crisis, nearing actually agreement on the bank recapitalization and on the way how to leverage their rescue fund to try to stop bond market contagion. But final decisions were still on hold until the second summit that is due on Wednesday, and the sharp differences still remain over the size of losses private holders of Greek government bonds will have to accept. The French President Sarkozy backed down in the face of implacable German opposition to his desire to use unlimited European Central Bank funds to fight the crisis. Instead, the Eurozone might turn to emerging economies such as China and Brazil for help in underpinning its cyclical bond market. Italy, the Eurozone state, now in the markets firing line, had been told to come up with a more convincing plan this week to implement including structural economic reforms and to raise its growth potential. And the Italian Prime Minister Silvio Berlusconi said he is expected to call a cabinet meeting today to discuss measures to boost growth, as Italy come under big pressure from European partners to step up reforms to restore market confidence. President Sarkozy also acknowledged that France's proposal to multiply the firepower of the Eurozone's rescue fund by turning it into a bank and letting it borrow from the ECB would not fly for now, because neither Germany nor the Central Bank of Europe accepted it. And basically the conclusion is that no solution is viable if it doesn't have the support of all the European institutions, as the German Chancellor Angela Merkel has stressed on the meeting. She also said that only two options remained on the table for leveraging the current 440 billion European Financial Stability Facility, and neither involved drawing on the central bank. So the officials said now that the emerging solution would combine using the EFSF to provide the partial guarantees to buyers of a new Italian and Spanish bond, while also creating a special purpose vehicle to attract funds from major emerging countries that could guarantee the bonds in the secondary market. So as we can see that the tone in the market is turning more positive, and the currencies are actually the euro and the sterling, as well as precious metals and the energies are benefiting out of this. However, the optimism persists in the markets, but the second day of the meeting on Wednesday will give us some more information, more clues how the things will be handled. We hope that final decision will be found this time and prevent further catastrophic actually results, as also the United States, as having a huge exposure to the Eurozone markets, would be affected, would be number one actually to be affected, and affected badly by in case of spreading of the current crisis. So all eyes are still on Wednesday's meeting and the final decision of the Eurozone officials. Until then, we can see that markets remain quite positive and supportive, with euro this morning lifting above firmly above 139 barrier and heading towards 140 zone, as well as sterling, while the gold and the crude oil hold steady after initial dips during the past week. A brief look to today's calendar at 7:30. So in approximately 15 minutes, we have actually we have the PMIs, a series of PMIs coming today. The first one to come is 7:30 is German manufacturing PMI that is forecasted at 50 versus 50.3, the previous month release, while the German flash services PMI is expected slightly higher at 49.8 compared to 49.7 previous release. At 8 o'clock GMT, the manufacturing and services PMIs come from Eurozone. Expectations for today for manufacturing slight decrease at 48.1 compared to 48.5 previous release, and services PMI expected to come at 48.6 compared to 48.8 previous release. And the other event from today, from Eurozone today, industrial new orders due at 9 o'clock GMT. Slight improvement is expected with today's release. The new orders expected to grow by 0.1% compared to the decline in the previous month release at minus 1.6%. That would be all from today's calendar. Now let's take a look on the markets to see the movements in past 24 hours, actually from last Friday's closing. As we can see, the euro is above 139.13, which is the previous high posted on 17th of October, after the shallow corrective and consolidative trading was supported at 136.50, and today's break above 139 extended so far to 139.52. A corrective pullback now on the overbought hourly conditions is seen towards initial dynamic support at 138.75, the 20 days moving average on hourly chart, and then the higher low at 138.21, which should in this case contain the dips in order to maintain immediate bullish tone. More improvement is seen on the daily chart, where the studies are emerging above their midlines, and the clearance of our initial barrier that was capping for more than 1 week the upside at 55 days moving average at 139.18 was cleared, opening way for a further extension higher with the Fibonacci 61.8% level at 140.06 coming next, and then 90 days moving average 40.60, and the key one 200 days moving average at 140.87, above which would signal further recovery and possible change of the current downtrend from 145.48 29th of October high. Cable is also in the strong uptrend following last Friday's strong rally through 158.50 zone previous highs, clearing also 159 and hitting a fresh high on Friday at 159.72. This morning up opening followed with a narrow consolidation with fresh bulls underway now, extension to 159.99, so just one tick under initial psychological barrier at 160. The positive near-term hourly studies signal further gains. However, the correction on overbought hourly conditions would signal would be preceding the fresh rally. Immediate support comes at 159.15, 159, ahead of 158.50 zone. Previous resistance now reverted to support. Also, daily outlook is improving, a similar situation with euro regaining momentum and the MACD breaking above the midline. A clearance of 55 days moving average now focuses 160.18, the 90 days one, and then 61.8 Fibonacci retracement of the broader downtrend from 166.17 down to 152.71 at 161. And then again, we have a key 200 days moving average at 161.35. So improving daily studies might be signaling further gains higher and possible extension towards 162 in case of breaking above 161.35, the 200 days moving average. Dollar yen seems to be emerging out of the recent over 2 months narrow range directionless trading, as last Friday's sharp fall below the recent range floor at 76.60 50 zone dipped through the strong supports at 76.10, 75.93 with spike low seen to 75.80, posting actually the fresh record low of dollar yen at 75.80 last Friday. Immediate bounce followed, however, the current consolidation remains capped for now by 76.50 initial resistance, and the scope remains for further extension lower, as the hourly and 4-hour studies are still deeply in the negative territory. The other thing that might affect the current conditions of the dollar yen is a possible intervention of the Bank of Japan. As I mentioned in our previous sessions, that they announced, they actually don't announce when, but they said that Bank of Japan is ready to intervene at any time when they find that the currency is getting too strong, and actually lately the yen was quite strong and affecting the Japanese exports. So now pending intervention is pending, as the Japanese finance minister put traders on alert for possible currency intervention of Monday after the yen's rise to a record high against dollar threatens to further squeeze exporters' profit and hold back economic recovery. So we have to consider that intervention of the Bank of Japan is actually quite possible at this point, and the pair, whoever is trading, must hold it carefully, as intervention is very likely at this point, as the yen is further strengthening, and the Japanese government and the central bank is not very happy with the current levels of the currency. On the upside, 76.70 and the 77, actually the main trend line resistance caps on the upside. A clearance of this and the 77.50 would improve the current tone, while lift above 77.85 and 78 is to confirm the fresh strength. Until then, the negative outlook persists, and the focus is to the downside. Possible retest of 75.80, fresh record low, and the likely extension lower on a break. Dollar Swiss maintains the short-term negative tone after initial corrective attempt from 17th of October low at 88.79 was short-lived. Actually was capped, we can see on the daily chart, by 20 days moving average, with the subsequent weakness through the main bull trend line drawn of 70.67 and the loss of 88.79. Currently extended losses to 88 zone. 88.04 was seen on Friday, and as well as this morning, with the negative near-term studies keeping the downside favored. Break below 88 opens 200 days moving average currently at 87.50 for test, and below which actually would signal temporary top at 93.13 and open way for a stronger reversal. Immediate support comes as 85.51 as 55 days daily moving average, ahead of 38.2 Fibonacci retracement at 84.54. Now we're talking about wider time span, as we are in the daily chart. On the upside, 88.50, 88.80 is the immediate resistance. However, the only clearance of 81, 91 zone would provide some relief and ease the current bear pressure. Until then, the firmly bearish tone focuses 200 days moving average for test. Also important hourly and 4 hour, actually hourly is not, but 4 hour studies in oversold zone might signal some stronger correction with the 20 days moving average currently at 89.36, maintaining the recent downtrend and expected to contain the corrective action to the upside. Commodities maintain rather positive tone, remain stable as gold was initially capped under 1700 and dipped down to 1603, just above our initial support at 1600, 1595, a loss of which would have been quite risky at this point, but recent bounce into 1650 zone now improves the outlook. All eyes are still on the Wednesday's meeting when we'll have some more information about decision of the Eurozone. Actually would give us the more clear picture, and the investors will have points that will direct them how to continue the trading. However, the gold maintains still optimistic tone. We need to see the clearance of 1695, 1700 as initial barriers in order to resume higher with the 38.2 Fibonacci retracement at 1725 coming next. On the downside, immediate support at 1600 zone ahead of 1595, while loss of the next level at 1582 would dampen the current positive tone and refocus 1532, the low of 26th of September. Crude oil remains steady. It's within the range after a rally from 74.94, low of 4th of October, peaked at 89.66, just ahead of our initial target at 89.75, and then 90.00 and 90.57, which is a strong resistance zone. Current ranging is seen consolidative as long as the low of 84.21 holds. However, no direction at this point, as the oil is also as the precious metals awaiting actually the Wednesday's meeting and the final verdict from the Eurozone officials to establish the new direction. However, the short-term tone remains supportive and positive from 74.94. The 4-hour studies are still above their midlines, keeping the upside in focus with currently the price action above 20 days moving average at 87.18. Focus on the upside 89.66, 89.77, and then comes 90 and 90.57. Below 84.21 opens next one strong support at 83.37, loss of which would soften the short-term uptrend and likely allow for some stronger pullback. We can see the short-term Fibonacci. So below 83.37 opens 82.33, which is the 50% Fibonacci retracement of the short-term uptrend from 74.94 up to 89.66. For now, the near-term studies are still positive, and the upside 89.66.75 is test of these levels remains favored for the time being.